You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity. Provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. This program is brought to you by Genesis Volatility, also known as GVol, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVol Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means we are back once again with the Crypto Rundown, the program here on the Options Insider Radio Network, where we go beyond our traditional stomping grounds of your Tesla and your VIX and your SPY options. Look a little bit further afield, see what's going on in those crypto waters. Of course, we're going to talk the volatility, the volume, the skew, the OI, all that fun stuff, and a whole bunch more. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the aforementioned network, reminding you, coming off the hottest, the busiest month in the 15-plus year history of the network. Yeah, we go back always. So a lot of people are discovering the world of options and derivatives and indeed crypto these days. If you like what you hear, you're on the on-demand side. Of course, all we ask is that you keep rating and reviewing. Clearly, the new reviews have a lot of weight, and especially on these new platforms. We're available on just about every platform under the sun, and we predate most of them. And so the new stuff always helps new people discover the network. And of course, if you want to go above and beyond, we're usually coming at you with a couple of shows a day. But if you need more in your life, you want exclusive content, you want pro Q&As, you want options oddities at the end of the week, you want to get access to our giveaways, you want live access to this show and everything else we do on the network throughout the week, you know where to go. theoptionsinsider.com/pro is the place to go to learn more. As we go on into our first segment, it is time to roll out the Crypto Hot Seat.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the Crypto Hot Seat, the portion of the program where we welcome on guests from throughout the world of crypto derivatives and proceed to pick their brains for the benefit of you, the listener. And next up on the network is a newcomer to the program and indeed to the network. He is Dan Gunsberg, the co-founder of the Hxro Network. Dan, welcome to the Crypto Rundown program.
Thanks for having me today. Happy to be here.
And Dan, as we are wont to do with all of our first-timers here on the network, why don't you go ahead and give our audience a bit of an overview of your background in the derivative space as well as the crypto space, as well as what it is you do day-to-day over there at the Hxro Network.
Sure. So my background has largely been in proprietary derivatives trading. I started my career on the floor of the Chicago Board of Trade in 1994, eventually became a trader, eventually came off the floor. I actually started trading U.S. Treasury interest rates, yield curve.
You were a rates guy. We
between,
won't hold that against you at all.
You got it. Thank you. And eventually went off the floor, started trading electronics, and kind of that's really where I cut my teeth. Eventually joined a prop firm in 2011, became a principal and chief operating officer there. We went through some tremendous period of growth. And when I got there, it was mostly a spreading shop. So they were really focused on trading future spreads in U.S. interest rates, CME Eurodollars, Eurex, Euribor, things like that. Mostly like the short end of the yield curve. And then we expanded into options, expanded into other markets. And while I was there in 2015, I learned about Bitcoin. It had prior to that a very nice run up, and then it had come, much in Bitcoin fashion, it had come way off about 90%, and it was pretty cheap. It looked like there was some good optionality there, and so I started to buy it, and pretty much sent me down the crypto rabbit hole. And in 2017, I left to go into crypto full time, and here we are today.
That's a pretty fast trip down the rabbit hole there, Dan. You discovered it in 2015. By 2017, it was your full-time job. So what was it that really lured you to the dark side? Was it just the movement? Was it just the optionality? Or you clearly saw there was more there?
Yeah, at the time, it was like Brexit was starting to heat up. There was kind of like a fundamental or kind of ideological case for Bitcoin at the time. And I really didn't know about other coins that existed. And so I looked at it and I mean, that summer, I first started buying in like September of 2015. And that summer, like in August, Bitcoin had traded, it traded all the way from like 1,300 down to like $160. And so I kind of said to myself, look, this is worth a shot here. And, if it takes off and becomes something, there's definitely real convexity here. And, so it gave me a good reason to go after it, just both on the fundamental side and then just kind of on the speculative side of things. And then as I learned about it more, and I think the timing was somewhat fortuitous because by the time 2017 rolled around, the whole Ethereum ecosystem really started to build up, and then you had like kind of the whole ICO craze. And then by October of 2017, I was so far into it that I left the trading firm I was at and then went into it full time. And once I went into it, my co-founder was an options market maker at the firm that I was at, and he joined me a few months later, and we conceptualized the early stages of Hxro, which really was more of an exotic options platform. We had created something called like a pari-mutuel market or pari-mutuel option, which effectively was saying like over a specific time frame, you had a contract and you pooled all the assets that were into that contract, and really was just answering the question of whether or not the price of the underlying asset would be higher or lower at the close of the period relative to the start. And the way the pari-mutualized market works is you pool all of the assets, and then the side that is in the money splits the assets pro rata. And so, just to kind of put it simply, and so we built that. Our original idea, we actually wanted to build real DeFi, like decentralized infrastructure for kind of clearing and margin and risk of kind of more traditional derivatives. But at the time, it was really only Ethereum was really the only blockchain that made sense to build on, and it didn't quite have the throughput or fee model that you needed to really do kind of higher volume type of trading, which is kind of from the background that we came from. And so we held off on that. We built this kind of fun, exotic options front end centralized platform and kind of caught lightning in a bottle and became very popular. And had run that we ran that for a couple of years, and then in 2020, we saw something called Serum, which is an on-chain order book that's built on Solana, being built. It was built by a couple of engineers from a group called Alameda Research, which is the proprietary trading firm that Sam Fried, who owns and founded FTX, owns as well. And so we kind of saw that it was possible to build something that required high throughput on this blockchain that was kind of touting that it has scalability up to 50,000 transactions per second, has a kind of immaterial level fees transaction fees. And so we saw that there was an opportunity to start building and start building what our original intention was, which is really this exchange margin and clearing infrastructure all on chain, and went down that path. We brought in teams from some of the largest proprietary trading firms in the world: Susquehanna, Jump Trading, Alameda, Pattern Research, Chicago Trading Company, and started building this. And that kind of brings us up to where we're at today.
Interesting. You mentioned, of course, the building on the Solana blockchain. The ETH versus Solana debate is one that rages with a lot of our guests, as you can imagine, week after week here on the show. I was curious about your choice for Solana. It sounds like it was really just based around the scale and the fees. That's what lured you to the Solana versus the ETH ecosystem there, Dan?
Initially, yes. And then as we dug in, knowing that the founding engineer, Anatoly, his background was really in high-frequency messaging. And then a lot of the product engineers that we had met, they, ironically had backgrounds in trading. So a couple of the ones that we're very close with were ex-Citadel engineers, and they kind of understood what we were going after. And so we felt it was the right fit. And on top of it, just the technical specs of Solana, which at the time when we started building on it, which was about a year ago, very, very difficult to build. And there's very few engineers that really understood how to build on Solana. First of all, you needed to understand something called Rust, which is a programming language that not a lot of people at the time knew. And then once you knew Rust, you kind of had to learn how to build specifically to Solana. And so we definitely had to cut our teeth in the Solana, the ecosystem. They call it chewing glass. And so we had to choose some glass and learn and found the right team to start building. And then as we brought in these other teams from our community, from these other trading firms who allocated the engineering resources, they all learned Solana. And then the tooling around Solana started to get better because other engineers in the ecosystem were contributing new ways of thinking about or building to it, where it was a little less, where you had to be a little less raw or kind of bare metal in terms of engineering to it, and made it a little easier and kind of accelerated things. And just one thing after another, it all kind of made sense. But really, yeah, at the bottom, at the base of all of it, it really came down to can we build something that could live within the fabric of the global derivatives ecosystem as real infrastructure. And in order to do that, we thought at a base level, you needed to have really, really low transaction fees, and you really needed to have this ability, or at least the idea that could scale towards very high throughput and TPS, transactions per second, in order to facilitate a viable marketplace. And so far so good.
Did you ever imagine when you were standing deep in the bowels of the Board of Trade in the bond pits that you'd be talking many years later about coding in specific languages for the Solana network to the metal, and these things that were just completely in the ether at that time didn't exist, and now they are our day-to-day lives here, Dan. It's funny how the world changes in a decade or two.
It's amazing. It really is amazing. I think through the 28 years now that I've really been involved in the space, in the derivative space, and you kind of look back on it and it feels like multiple lifetimes ago when I started, but within kind of the context of just the universe, it's such a very short period of time. It's amazing how fast things have moved all the way from Project A, which was this first kind of internal electronic trading system on the Chicago Board of Trade, which I was spending my nights trading on when I first started trading back in the late 90s, and then all the way to today. It's pretty remarkable.
It's funny because I was at first initially skeptical, like a lot of people were, of these markets. I had heard about them early, and you're right, they kind of had a boom, then a bit of a bust period. So I kind of moved past them. Then you're right, that same kind of period, that 2015 to 2017 period, is when I started really hearing about them again quite frequently. And it seemed like, for whatever reason, the Chicago derivatives community really just embraced them en masse for a variety of reasons. Obviously, this community here has been under some pressures. So they're looking for the next big thing. So maybe they were primed and ready to embrace a new market that maybe other marketplaces in, Chicago or New York, I should say, in other areas, maybe weren't ready to do. Maybe it was the fact that derivatives trader is always a little bit on the bleeding edge when it comes to risk anyway. So maybe their risk tolerance a little bit higher. But for whatever reason, it seemed like the prop community here, the trading community here in Chicago really embraced it. And that's what really started luring me into these markets and saying, maybe there's more here than I initially thought, Dan. So it has been fascinating to watch the embrace of the Chicago trading and derivatives community to these products. And you're a shining example of that, Dan. What you built here with the Hxro Network kind of has grown out of this ecosystem, and it's really been fascinating to watch.
Yeah, thank you. I appreciate that. And I'll tell you something. I have a couple of thoughts on that, and kind of Chicago derivatives community's involvement in it is, first of all, obviously you have the trading opportunity that exists, and it's been there for a while. And you have an asset that a few years ago was pretty consistently trading somewhere around an 80 vol. That traders are going to come to that, especially if there's any type of volume there. And then also you have this kind of retail component that was trading on it as well. So quite a bit of trading opportunity. The fragmentation across the many different exchanges and jurisdictions in terms of the market places, just the market infrastructure and so many different exchanges. And again, when you have these different jurisdictions, the pure arbitrage that existed for firms that could capture it is pretty remarkable. And like the story of like Sam Fried, even of how Alameda got started. It was all about the kimchi yard, and they were actually like taking backpacks of money and bringing them into Korea to put on Korean exchanges just to capture the arb between Korean exchanges and other exchanges globally. And pretty incredible beginnings there. But there's that aspect, and then there's kind of the time in the space now, and it really makes sense with an industry like the crypto space in something like derivatives, that a lot of these big firms are starting to think about alternative ways of changing the market, and can they create a market that maybe is more fair? Because even when you get up into the real competitive ends of it, and even put the ultra low latency game, it's even people think about, well, maybe it's unfair. There's certain aspects of the market that make it unfair for just like the retail trader. But even in that upper echelon of professional trading firm, there's a lot of things that are kind of theoretically unfair that have existed on incumbent exchanges that maybe give a very small handful of firms an advantage, and it's a real time to rethink all of it. And so when we started down this path of building this DeFi infrastructure, we found the timing to be great, because a lot of these firms were looking for new alternatives, and they think that there's a real opportunity. You can kind of see it coming. You see the work that FTX has done, after purchasing LedgerX, and now trying to scale their regulatory position in the United States, for example, and kind of taking on these large incumbent exchanges. And we feel, and our community feels, that you're going to end up have this world where you have these incumbent exchanges, and then you're going to have this kind of new direct regulatory stack that firm like FTX is going after, and then you're going to have DeFi. And I think everybody has kind of laid their bets in that way, and our thought and position is that Hxro Network will kind of own that DeFi lane.
Well, you mentioned the Hxro Network. Let's get into it a little bit, because you mentioned at the outset there that it started off as kind of a bespoke platform for really exotic options and the pari-mutuels you mentioned there. But it has obviously evolved as you've been building on it for the last couple of years here. So if people come to the Hxro Network now, what can they expect?
Yeah, well, so first, the network itself is infrastructure. So it's what we call like a key primitive layer for derivative markets that are built, specifically this one's built on top of Solana. It provides that foundational infrastructure. So like the exchange, the risk, which includes things like margin and liquidations, as well as the settlement and clearing functions to which market makers, professional traders, OTC brokers and really any CeFi or DeFi application. So this could be a centralized exchange, a decentralized exchange, a decentralized options vault, a structured product platform, even into like prediction market platforms, sports books, NFT trading platforms. They can all easily connect into the Hxro derivatives marketplace to capture this professional grade derivative market liquidity. And how we think about it is very much like a B2B to C stack with the primitive with Hxro Network at the bottom, applications, like more the user-facing applications built on top, and then automated traders and market makers connecting in direct access, and then all of that liquidity aggregating and unifying and bottoming out into Hxro markets. So initially on mainnet, we just launched a mainnet sandbox. There is a Bitcoin market that has a perpetual future and then eight expiring futures behind it. So 2 weekly futures, 2 monthlies, and then 4 quarterlies. And then all of those are interconnected through combinations and spreads. And so the perp and the linear future markets are the first ones that we're launching, and we're building up liquidity there. And then the next step will be to launch European cash settled vanilla options markets on top of it. And then from there, the plan is to really open up kind of a market factory, if you will, and provided that there is an oracle that can be the kind of endpoint to decide the truth on pricing. So, for example, Pitt's network, which is a fairly well-known data oracle project that was started by Jump Trading, by a team at Jump last year. So Pitt is plugged in. So anything that Pitt can broadcast in terms of data, it composes with Hxro Network, and then anybody can effectively come and spin a market up provided that Pitt has that data. And that's really the plan for it. And in terms of like the user base, it's going to mostly be kind of professional traders and then applications at the top. And then those applications is really where kind of the more day-to-day retail trader and user will come in through.
One of the stumbling blocks for a lot of these initiatives out of the gate is kind of that institutional, indeed, the liquidity, the market maker support down the line. Sounds like you have a lot of firms lined up already: Susquehanna, Alameda, Jump, CTC. So it sounds like we could expect some decent liquidity, some decent market maker support down the road from your network there, Dan.
Yeah, that is really the plan. We do have, once we get into the nonlinear markets, once we get into launching options and things like that, we have some very interesting AMM protocols that we've built around those. And in terms of having that base professional network for liquidity, it is very key, because we know in these markets liquidity is reflexive. So the deeper liquidity you get, the more competitive the liquidity becomes, the better markets the end user can get, and the deeper markets that you can get. So now you can get some of the larger OTC markets coming in and trading more block size and whatnot into the marketplace without having heavy market or price impact. So that's very much by design, and it was kind of like a base requirement for us if we were going to go down this path. And fortunately, that these teams were willing to get behind us, and we're well on our way now.
Well, of course, we are talking in some interesting times here, and you're launching all this, of course, in some very interesting times for the crypto market. You mentioned back in your kind of inception, your genesis for crypto was back in 2015, and one of the first major rallies and sell-offs. We're kind of in the midst of one of those right now. Everyone was talking really about, is this crypto winter 3.0, whatever number it was. We have seen a bit of a resurgence over the last couple of weeks, so maybe we are finally coming to an end there. But I'm curious for you, as you're out there trying to build and develop and launch this platform and generate interest from developers and trading firms and everything else like that. Has it been more challenging in this recent environment where everything was selling off? Have you seen a lessening of demand, a lessening of interest in the platform as a result?
I think all things being equal, it's probably been fairly neutral. And I say that because obviously when the market's rallying, these are some of the most reflexive markets that I've ever seen in my life. And so the amount of users and the amount of kind of attention that the market as a whole gets really correlates highly with the price of these assets going up. But for us, first of all, we're more of a function of this market as it continues to evolve. It's going to really thrive, or the Hxro Network will really thrive more on volatility. The people that are really involved and are very attuned to it do have a longer term view of things. And we all have been around this space long enough to know kind of the cyclical nature of the market. And how I say that things are reflexive on the way up, they are also reflexive on the way down. And that's kind of what creates the opportunity in the space. So while, when things go down, things do get quiet, at least kind of more at the retail level, but it does allow us to focus a little bit more on building. And also, a lot of the silver lining of it is you don't have these kind of fly-by-night projects that come about when the markets are going higher. I think when you're kind of in a peak rally mode, it's like every day I think there's 100 new projects coming out, all kind of trying to do the same thing, and they get very loud very quickly, and I think they end up being very short-sighted, where we've kind of played more the tortoise and the hare game here, and are trying to think about what does this look like for us in a year from now, 3 years from now, 7 years from now, and 10 years from now, and not so much like what does it look like before this next rally ends. And so I think that's the fact that we have been kind of here and have become more of a little bit more of a flagship name in the space and had longevity, is that when the market quiets down and you're not really competing with a lot of these fly-by-night projects for attention or for mind share, people start paying more attention to you, and it's a little easier to capture people's attention. And so that has really been a big plus for us. And, hopefully we're timing things as, I do feel like the market is in the beginning stages of the bottoming process right now. And I've been through a few of these, so it feels pretty familiar. And so, I think our rollout and our scaling should bode well, with the market kind of moving up again, in hopefully the not too distant future.
We've heard that from a lot of our guests, that rather than diverting attention from them, it really has helped to shake out a lot of the noise and really let people focus on the projects that seem to have a lot more value. It sounds like you're seeing the same thing there, Dan.
Exactly. That's exactly it.
Well, Dan, I appreciate you taking some time out of your day to join us here in the Crypto Hot Seat. We have to keep rolling with our program. But before we go, if our folks are intrigued by what you're talking about here, they want to learn more about what you're doing over there at the Hxro Network, where should they go? What should they do, Dan?
Yeah, you can go to, you can visit the Hxro Foundation's website at hxro.network, NETWORK. Lots of information, lots of documentation there. You can follow Hxro Network on Twitter at Hxro Network. You can follow me on Twitter. My handle is at HXROBTC. And then in those Twitter bios, there's information for our Discord, which is really where most of our community lives. So, any of those outlets is good. And we're pretty much there 24/7. So feel free to hop in and say hello.
There you go. Check them out, hxro.network online. And, of course, at HXRO Network, all one word, on Twitter, listeners. As we keep on rolling, it is time to head out into the Bitcoin Breakdown.
It's time to explore the latest trending activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. Fascinating stuff. So many interesting new products lurking out there in the crypto space. We try to bring them to you week after week here on the show, including obviously things that are near and dear to our hearts here in the crypto derivative space. And speaking of your hearts might be a little bit fuller this week if you're one of the Bitcoin bulls out there, because Bitcoin getting a bit of a lift this week. It was 22,882 on our last show. Coming into the start of the show this week, 23,968, up a whopping 1,086 handles. Doesn't sound like much because Bitcoin has moved a lot more than that, sometimes just in a few minutes. But for all of you out there who are hoping maybe beginning of the end of this crypto winter. This is a little bit more ammunition for you folks out there. Had a bit of a range over the course of the past week as well. Got down to about 22,461. That was last Thursday. And the high coming earlier today, 24,160. So we did break the 24K level, if ever so briefly. By the way, all of these analytics coming at you courtesy of our friends over there at Genesis Volatility. Gvol.io, the place to go to kick the tires and light the fires. They have to have one of the best taglines in the business right now. So much edge, you'll cut yourself. It brings a smile to my face. Brand new coat of paint, a lot of new analytics under the hood over there as well. Gvol.io is the place to go, listeners. If you did that, you'd see that the current Bitcoin average at the money volatility, they kind of sample it across the term structure, hanging out right at about exactly a 70. That's down almost 4 points, about 3.85 points from where it was this time last week. So gently drifting lower, no surprise. Had a bit of a range, but not an explosive one this week. So no surprise that Bitcoin vol gently drifting a little bit lower. Same thing out there on Simon's BitVol, which is, of course, his rolling 30-day Bitcoin VIX. It's at about a 79.3 this week. It was an 80 last week, so gently drifting down there as well. If you want more from Simon, join us on the Volatility Views program coming up, I believe, next week. He will be beaming in from across the pond to share the latest on all things going on in the volatility space. Maybe we'll sneak some crypto in there as well. Should be fun. Looking at the skew, for the last couple of weeks, it's been slowly fighting its way out of the negative hole it's been hanging out in for the better part of the last few months. And that remains the case this week. It was negative 2.75, so still showing some bearish sentiment, but obviously a lot less than it was even a few weeks ago. This week, it is about a negative 0.75, so it's come up another 2 points. So who knows? Maybe by this time next week, we'll see a fully positive skew, something we haven't seen in Bitcoin or in the broad crypto space in quite some time. Simon's Bit skew kind of showing something similar, 93.6 last week, 92.3. This week, again, that's kind of a rolling 30-day approximation of the skew, kind of aggregated into one number. You can check it out over there at t3index.com if you want to learn more. In terms of the action out here this week, what's going on from an OI perspective? Are we adding? Are we subtracting? Gaining a little bit this week. The calls on Deribit open size right now up to about 127,500, so up about 2,750. It's not a ton, but a little bit. Again, making up for the fact that we saw July go off the board last week, take a lot of OI with it. The puts at 66,000. It's up 2,500 from this time last week. So Bitcoin still hanging out right around that 2-to-1 level of calls over puts. When we get to ETH, you'll see that number is getting a little bit more outlandish there, that ratio. In terms of where you folks are lining up from an expiration perspective, where are you piling in from your new positioning? It's September leading the dance right now with 61,300 contracts open on Deribit. It's up about 2,800. Number two, we got December, 51,000. It's up about 800, so not even 1,000. And then we got August bringing up the rear with 34,500, up about 3,500. It seems like a lot of the paper we're seeing these days is really piling into the back month. So be an open question if August can catch September or even December before it rolls off the board later this month. Let's move on now to the size positions. What are the top 5 big open positions in Bitcoin options on Deribit right now? Let's find out. Number 5, it is the 45,000 strike with 7,900 contracts open. That is a newcomer to our top 5 this week. Number 4, we have the 40,000 strike. That's hanging out. It's been there for a little bit now. 9,600 contracts are open there. It's up a whopping 100 from this time last week. So kind of spinning its wheels this week. Number 3, we have the 30,000 strike. That has 9,700 contracts open. It's up about 1,100. So that one climbing a little bit this week. Number 2, the 20,000 strike. That has 10,000 contracts open. That's up about 1,400 from this time last week. And number 1 remains the 25,000 strike. That has 14,000 contracts open. That's actually down about 2,000 from this time last week. So folks piling out the 25,000 strike and into the 20K strike this week. Interesting stuff. In terms of the action, speaking of 20K, that was pretty much the highest volume day we had this week. 20,000 contracts going up on the 5th over the course of this past week. That's a decently active day. That kind of beats some of the last few weeks we've been looking at. I mean, last week, the biggest, most active day was 14,000 contracts. So more paper than that. Obviously, it's a far cry from what we saw back in the middle of the June, 54,000 contracts, but a decently active day nonetheless. Getting on out to CME land. Let's see if they had any decent action across their broad spectrum of Bitcoin products. Let's start with the big Bitcoin options. The OI shot up recently. Now it's coming back down. There are 3,100 contracts open on the Bitcoin options, down 1,900. Only about 59 going up on Friday. So kind of a light period. Remember, we were speculating for a while there. What's going on with these options? Seems like people are starting to discover them. big funds maybe trading them because the OI had jumped up to about 5,000. That obviously starting to go away now. The Bitcoin futures, kind of the same story. The OI trending down there as well, down to about 1,200 contracts to about 12,600. And we only saw about 9,300 going up on Friday. So kind of a light day there as well. Let's get out to the contracts more of you are interested in. The micro stuff, the micro Bitcoin futures, also seeing OI coming off the board there as well. 23,600 contracts open. That's down about 4,600 from this time last week. And we only saw about 8,200 going up on Friday. So kind of a quiet week across the board there on the CME front. Let's see if we can find more action when we go to explore the altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, everybody. It's that time again, listeners. Time to explore everything outside of the big dog, which is Bitcoin in the altcoin universe, except for right now when we start off with the top 10 from a market cap perspective. Getting a little bit of some shakeup here. You know, we were joking for a while now that Doge has managed to just cling to the number 10 spot with a death grip for the better part of the last couple of months. Well, Polkadot finally kicking into gear, bumping Doge off the list. Polkadot number 10 now with about 10.2 billion worth of market cap. So we're back over 10 billion again. For a long time, it was in the 8 to 9 billion range. That's all it cost to break into the top 10 in crypto market cap. Number 9, Solana. We just talked a lot about Solana on the show today. A 14.7 billion worth of market cap there. Number 8, Binance USD, 17.7 million. Number 7 is Cardano, 18 billion, pretty much exactly. Number 6, XRP, 18.3 billion. Then once again, we jump up to number 5, BNB, 52, almost 52.5 billion. Number 4, USD Coin, 54.2 billion. Number 3, it's Tether, 66.5 billion. Numero 2, it's ETH, 215 billion. And taking the top spot yet again, it is Bitcoin, 457 billion on the old market cap tape. In terms of action, ETH also looking a little bit more robust this week than it did last week. Last show, 1626 coming into this week, 1778, up a whopping 151 handles on the week. We had a nice high actually coming in earlier today, 1815. So it broke the 1800 level again. And the low was last Tuesday, 1569. In terms of vol, we're seeing the same general trend in ETH that we're seeing in Bitcoin, which is slowly coming off a little bit. Last week, we were at exactly 100, exactly triple digits. This week, about a 96.85. So coming off a little bit there. Skew, same deal. Negative 2.5 last week. So it's been negative for quite some time, but we've been talking about a lot of people piling into far out of the money calls in ETH for some time, and that's being reflected now in the skew. The skew is still negative, but only ever so slightly, negative 0.25 now. So who knows? Next week, we could easily be talking about positive skews in both Bitcoin and ETH. That'd be quite the swing from what we were talking about just a couple of months ago out there. In terms of action, man, it is still all calls all the time in ETH. You folks just love them, gobbling them up. Almost 3.2 million calls open on Deribit right now, 3.18 million. It's up 370,000 contracts from this time last week. So you folks are just piling into these calls, and a lot of them on that 3,000 and north level there. The puts only 737,000 open. It's up about 11,000. So once again, you folks have no love for the puts. It's all calls. We're more than 4-1 now. Calls over puts. It's getting pretty extreme. You folks clearly like yourselves some upside here in ETH. In terms of action, we actually had a pretty active week. The third, we saw 423,000 contracts going up. That's a pretty active day. That actually even eclipses the big day of June 13th. Only 391,000 contracts trading on Deribit that day. We got to go all the way back to May 11th to find a more active day. That was 461,000 contracts. So a pretty active day this week on the third, which again, not entirely surprising. We've seen some decent price action in ETH over the last couple of weeks. Let's go out to see where you folks are lining up from an expiration perspective. Number 3 out here is March, 818,000 contracts. That's up a whopping 282,000. So you folks are, again, piling into the longer term stuff. Number 2, September, 935,000 contracts open there. It's up only 21,000. And December, 1.31 million. It's up 60,000 contracts from this time last week. So clearly, a lot of those OI gains coming in the longer term March contract, which is always interesting. Let's see where you folks are lining up from a size position perspective. What are the top 5 size positions in ETH options right now? Number 5, it is the 4,500 strike. It's got 161,000 contracts open. That's a newcomer to our top 5 this week. Number 4, Back to some more relevant strikes. 2,500 strike, 190,000 contracts open there. It's only up about 3,000, so that one's kind of treading water this week. Number 3, we have the 3,500 strike. Remember I said you folks are piling into longer term and farther out of the money contracts. And that remains the case again this week. The 3,500 strike with 327,000 contracts open. It's up a whopping 96,000 from this time last week. Followed by number 2, the 4,000 strike. That has 388,000 contracts open. That's up 109,000. So adding a couple 100,000 contracts just in the 3,500 and 4,000 strike. And then treading water this week, but still managing to hold on to the number 1 spot. It is the 3,000 strike. Has exactly 400,000 contracts open. It's up about 7,000 from this time last week. So folks continue their interest in extreme out-of-the-money strikes here to the upside in ETH. Are you one of them, listeners? Are you piling into some of this stuff? Hit us up. Let us know. I'm curious your thoughts on this continued interest in far out-of-the-money calls here and longer-term ones in ETH. Let's get on out to the CME products, see if anything was lighting up here this week. Let's go out to the big ETH futures first. The OI trending down about 500 contracts to about 3,500 this week. And we saw about 8,600 going up on our last trading day, which was Friday. So actually a pretty decently active day considering the fact that these are pretty beefy contracts. So some numbers going up out here on the old big ETH futures. And the micro stuff, not as much, which is kind of interesting. Micro ETH futures, we saw 16,500 going up on Friday. And the OI dropping back down. It shot up recently, now going back down, dropping about 18,000 contracts to about 47,000. So still a fair amount open, but well below that north of 60,000 level it was not too long ago. Let's check out on some other altcoin that we got here for this week, listeners. First off, to XRP, kind of treading water this week as well. 37.3 cents last week, 37.9 this week, up 0.6. And then we've got good old Doge, like I said, kind of, even though it rallied this week, not enough to maintain its grip in the top 10 there. It was 0.067 last week, 0.069 this week. So sorry, all you Doge fans out there. No love, no top 10 for you this week. Litecoin, it was 58.5 last week, 62.75 this week, up about 4.25. So nice little pop for Litecoin. Cardano, 50.5 cents last week, 53.2 cents this week, so up nearly 3 cents, about 2.7 cents on the week. Polkadot, we mentioned their pop. It was 8.15 last week, 9.22. This week, up a little over $1, about $1.07 here. So nice little pop, good enough to get them back into the top 10. And Solana, what we were talking about most of the show, 41.17 last week, 42.14 this week. And then, of course, speaking of S names, everyone's favorite out there, good old Shiba. Any Shiba Lambos pulling up this week? Let's go find out. Last week, 0.000012. This week, a whopping 0.000012. So once again, listeners, unfortunately, no Shiba Lambos on the docket this week. All right, everybody, that's going to do it for the crypto rundown this week. I want to thank our guest, Dan Gunsberg from the Hxro Network. Check them out for yourselves. Hxro, trying to be cute there. Not hero, Hxro. So don't go to hero.network, Hero. You find something else over there. Check it out for yourselves. Give them a follow on Twitter as well, at Hxro Network, Hxro Network, all one word. .com. And of course, you know where to go to kick the tires and light the fires on all things Genesis volatility. It's just GVOL, GVOL.io is the place to go to kick the tires and light the fires out there. And we'll see you back here on Wednesday for a great pro Q&A for all of our pro members, as well as for all you folks who are still new to the world of options. Got a great double dose of education Wednesday coming at you. Options Bootcamp and Options Playbook Radio back again on Thursday. Another double dose this week in futures options, which if you're listening to this show, we do touch on crypto on that program as well. So check out TWIFO as well as the option block, Friday volatility views, and options oddities. And we're back again next Monday, another episode of the Crypto Rundown. Stay safe out there, everybody.
This program is brought to you by Genesis Volatility, also known as GVOL, home of institutional-grade crypto options analytics. Whether you're trading CeFi options or DeFi options, cryptocurrencies move. Use GVOL Analytics to analyze implied volatility, model realized volatility, structure positions, and unlock alpha. For more information, visit gvol.io. That's GVOL.io. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.